Trading at night. The key to trading at night and to trading, period, is simplifying the process as much as you possibly can.
Subscribe to our channel.
The more complicated a process, I think the worse the strategy or the process becomes. You have to make it as simple as possible, especially if you have not figured out how to be profitable consistently, or you're going through a long drought that you just can't seem to be profitable for a month, month after month. At that point, you have to make things a lot more simple. And in my opinion, trading at night and trading at any time, the best way to do it is to make it as simple as possible. And one of those ways is, as I was talking about this morning, is using the stock indexes or finding an underlining that really meets your temperament, that you can follow and follow and follow. And then you start getting a feel for it. You start understanding how that underlining trades, and you start to become very, very comfortable with it. If you ever read some of the books by Jack Schwager, the Market Wizard books, it's a number of different books, but he has interviews with a lot of different traders, and a number of them talk about trading just one underlining, and they became really good at just trading one thing. Obviously, you have traders out there that can trade anything and they're good at it, right? But I would argue that when they're going through a down period, sustainable or a prolonged down period, they will go back to the basics, go back to something really, really simple, because this trading game is a mental game. It's all about psychology. It's tough, right? When you start to win a lot, you start getting big headed. You start thinking that you run the world and you can't lose. Then when you start losing, it doesn't take a lot. A couple, 2, 3 times, and next you know you start losing your confidence. And so it's all about figuring out how to make things simple so that you can win as consistently as possible. So if you're going to trade at night, let's say you have a full-time job and trading at night is the best option for you. Well, me personally, would trade the ES. And even if I put a bunch of different contracts in it, and I do that a lot in my personal account, I'm okay with trading that stock indexes at night, especially the ES, because the liquidity is so robust in it. But you might be like some of our other members that want to trade oil a lot, and you can do it at night. You might want to trade the bonds. You might want to trade some currencies. You might want to trade some metals like gold or silver. You can definitely do that, and you can do it at night. But you want to make it as simple as possible. Right? I wouldn't be just willy-nilly all over the place, especially if you're new, because you have to understand the products that you're trading if you want to become really, really proficient at it. Okay? And so tonight I'm going to show you how I would trade at night if I had a full-time job. What type of trade I would put on consistently to try to make consistent monies month after month after month. So it's two type of trades that I would use. I would use a bread and butter trade, 30 to 60 days out, and I would use a shorter term trade between 1 and 7 days. Now, we're going to demonstrate and probably put on one of both this evening, at least one. At least one. All right, so let's jump into the first type of trade that I would do. And we're going to go to this ES. Type in the ES. This is the S&P 500 index. It's the most popular index in the world, and it's the most traded index in the world. And this to me is a way to simplify things so that you don't have individual stock risk. You don't have to worry about earnings. You don't have to worry about a CEO, dying or doing something inappropriate that hurts the stock. You only have to worry about the broad market, right? If you're going to trade something like natural gas, then you don't have to worry about earnings and things like that, but you do have to understand that it can move. You can easily have a 7, 10, 15% day up or down in natural gas. So you have to factor that in. You have to understand what you are trading. Now, looking at this ES and doing what we call a bread and butter trade between 30 and 60 days. All right, so I'm going to go over here and I'm going to look to put on a trade between 30 and 60 days. You see that, as I indicated earlier, you can do a lot of different trades in an underlying. I got different expiration periods, I got different deltas and all of that kind of stuff. And we did have one of the trades come off already. So we have all these different days. So in this case, I'm going to go out a little bit further and I'm going to go to a 51 days expiration. And I'm going to put on a trade that works best for this account buying power wise. And you will do the same kind of concept if you were trading at night, if you had a full-time job, or you just preferred to trade at night. And you know, some people do. All right, so let's go here, and I'm going to look for something that's high probability. You know, at the Dorian Way, we usually trade no higher than a 15 delta. So I'm going to go over here and I'm going to look to test out the 5 delta and see what I can get there. And I'm going to look at the 10 delta and look at the 15 delta, and we're going to decide which one is better for tonight. And it's no right or wrong answer when you're doing these. It's all based on what's best for your account at that time, what you're feeling, what you are more comfortable with, you know, probabilistically, right? Sometimes you might be a little bit more bullish on something, so you're okay with only having probabilities of, you know, 70%. Sometimes you might be very unclear, uncertain, so you want to have some probabilities of 90 plus, and that's perfectly fine. In this case, we're gonna go down here. We're gonna do a 95% probability of winning first, and then we're gonna look at some other stuff here. All right, so in this case, we're going down to the furthest 5 delta, and I'm going to start off by doing a 60-point wide spread. And if I did this, you can see in this account, it's going to give us $75. If you're trading the ES is $50 per point. It's not like stock. Stock is always $100 per point. The ES is $50 per point. If you're trading options on futures, you have to know the denominator. What is the amount per point? In this case, the ES is $50 per point.
Subscribe to our channel.
All right, so the ES is $50 per point, and this is not 150 that you're getting. This is 175. And in this account, it's encouraging me to put on something that's bullish. So that's why the buying power is insignificant. You might do this trade, and the buying power might be 300, might be 400, might be 500, something such as that. Usually no more than 500. So this right here is we have this rule, the standard type of rule in the Dorian Way, that we want to receive at least $100 after fees and commissions. So this is not giving it to me for the 60-point wide spread. If I do a 90-point wide spread, something like this, then this is going to give it to me, and it's not really changing the buying power. So I'm going to have a 95% chance at least of winning on this trade because I'm at a 5 delta. So that's attractive. It's 51 days to go. The S&P 500 has to go back past its lows, because its lows were around 3,500. This right here is 3,490. You can say that's semantics, maybe it is, but it would have to at least go back to those lows before we can lose at expiration if we was holding this to expiration. You guys know we don't hold things to expiration. We're going to get out of this at 50 to 75%. I would try to get 75% on this trade. Now let's look at a different one. This is attractive. Let's look at another one. Now let's go to the 10 delta. We're going to go to the 10 delta furthest around the money, so we're going to choose this. Originally we did a 60-point wide, so let's do another 60-point wide to start off with. So in this example, we're now getting $188. On the last one, we got $108 before fees and commission. Now we're getting $188 for this 60-point wide spread, and we have a 90% chance of winning at least, right? A 90% chance of winning. That's pretty attractive. What if we decided that we were going to make this, instead of 60 points, let's say we made it 50 points. Well, if we made it 50 points, we're still going to have the same probability of success at expiration of 90%, because we did not touch this short leg. This is the risk leg. This is the leg that matters. This 10 delta leg, this red leg here. This one doesn't. So if I move this back this way or up this way, it does not matter. That as long as if it's below this on the put side, below this red leg, the probabilities are not going to change. But your amount you're going to make is going to change. So if we go here and we did a 40-point wide, this is still attractive. At a 10 delta, 40-point wide, this is the lower the width, or the smaller the width, the less the possible max loss. We don't worry about max loss because we base our risk on this leg, but it's still good to factor that in. Try to optimize the trades as best as you possibly can. So I like this 10 delta. I like it at a 40-point wide. I like it at a 60-point wide. I like it at I would probably like it at an 80-point wide spread. So I definitely like that. If we did an 80, it'll look like this. So you're getting over $200. In this account, it's still really attractive. In your account, it might be about $500, which would still be attractive return on capital wise. All right, so now we're going to go and look at the 15 delta. So if we went over here to this 15 delta, and let's just say we did a 60-point wide spread here again. So if we're going to do a 60-point wide spread, on here, you can see that this is going to give us a lot more capital because we're getting closer to at the money, and so the strikes or the options are more expensive, so you can get a little bit more. So we can get 313 over 2688. The buying power is still going to be a credit for this account. This is this is the trade here. 51 days to expiration, and so we had three different trades that we could choose from, and so for me this evening, I want to do a trade that is a little higher in delta. I want to do the 15 delta, and I want to do it with a little wider than we normally do, what I normally do at a 15 delta. So a lot of times at a 15 delta, I'm looking for like a 20-point wide spread and something like this. Right? I'm getting $100. The max potential loss is under 900, as you can see. But in this case, I want to grab a little bit more premium, and so I'm going to go a little wider. So this is 20 points. Let's see what happens if we go 40 points. So if we did that, and I'm going to put it in at 440, and we're going to send that, and we're going to see if we get filled. And if we don't get filled, we're going to let it play out for a second, okay, before we come back to it and make an adjustment and so forth. You don't have to get filled right away, unless it's at night and you have to you got kids or you got to cook dinner or whatever case may be, and you just want to get filled and move on. Then you can adjust the price. If you are selling to get filled, you have to lower the price, right? Just like in the real world, if you're selling something and you have no takers, then you lower the price and see if that causes some people to be interested in buying what you're selling. If you are buying something, right, and you have no sellers, no one's going to sell you something, you're trying to buy it, then you're going to have to increase the price, just like in the real world. So now let's jump back to that trade because we haven't got filled, right? And almost forgot about that trade. And the market has kind of dropped a little bit since that. I mean, these pricing has dropped a little bit, but let's see if they're fooling us a little bit. So we're going to work it down. Okay, I'm going to drop this down to 235. We're going to send it, and no love there. And give it to me. So I'm going to go one more time. Well, I'm going to go until I get filled actually. So I shouldn't say one more time. And let's see if we can get filled here. And then there we go. Right. So we got filled, and we have a super high probability of winning. I was talking about another trade as well that I said we do if you were trading at night. And so I was talking about a 30 to 60 day. We just got filled on that one. I was also talking about a 1 to 7 day trade. So if we go over here and let's look for a 7-day trade or potentially even a 1-day trade, but let's start with the 7-day, see what it looks like. And let's just do something super high probability. Let's go to this 5 delta here and let's do a 20-point wide spread. And this is for demonstration purposes as well. So we're going to go to this 5 delta over here and we're going to do a 20-point wide. And so in this example, we're using $1,000 to make $60 before fees and commissions. We have a 90% chance of winning on this trade at expiration. Our probability of getting 50% should be a little bit higher than that. Okay? So this is 7 days out. The expected move is 56 within this time frame. So if we double that, that would take us to 112. So if we subtract 112 from here, right, and to the 4116, so that'll take us to 4004. We are way past that on the put side. And then if we take the 4116 and add 112, that'll take us to 4228. We are basically there on the call side at the 4230. And so you can get further away on the put side than the call side. But if you wanted to skew this a little bit or move this a little bit up on the put side, and let's say you decided that you wanted to, make the put side wider, or let's say, for example, we want to make this put side wider, we can do something like that. Keep the probability the same, but put a little bit more max loss risk on the put side. The buying power didn't really change very much, right, in this account. Or you can do something like move this put side up more, because we can go as high as, I think it was the 4,000. So let's just say we went somewhere like here to this 6 delta, did a 20-point wide still. That would take us to $73. So the same old concept, right? But if I just say we wanted to do this a little bit more, we're going to have a little bit, just for demonstration purposes, we wanted to do this a little bit more conservative. So this is the trade, and I'm going to put this in, and then we'll see how it plays out.
Right? You're not getting very much on your put side. I think you're only getting like $25.
Is that correct? I mean,
yeah, I think so. Because I'm trying to look for. I'm like even delta, and I'm trying to get a little more negative.
Okay.
So
all right. So it's 20 on the put side, like you said. So that's not all that attractive, right?
No, not on the put side. The call side's not bad though. It was 40 or something.
So the
That
call
looks
side
good.
is 40. So that's decent for this amount. So in this case, if I make the put side wider, let's just say I went to something like this, I can do that, and that would make the put side 40 points as well, right? $40 as well if I did that, right? And that would keep me at the 90% probability of winning, and or I can move it up, right? And if I move it up, I can keep the risk I can keep the risk, fairly the same, but obviously it's skewed to the downside here right now. So if I go over here and I say I did that, that would give me almost 40 on the put side. If I went to the 39.70, 39.50, so that would go 40 and 40 on both sides there. And this is the trade, right? So once again, the 112, 41.15 minus the 112, that's the 2 times expected move. That's 40.03. That is still, 30 points away from here. So, and we got 7 days, so we can adjust and so forth. So,
How is that giving you negative delta?
so because the call
Doesn't make
side is
sense.
still closer percentage wise and still closer point wise, obviously.
Oh, I don't look at
So
the delta. I was just subtracting deltas.
correct. If you just look at the deltas, then it should be giving you um, um, positive delta, but that's not the case in this scenario because the call side is closer percentage wise.
Okay, thanks.
You're welcome. All right, so I'm gonna go here and I'm going to send this one, and so I just want to get some feedback though. Would you and Susan, maybe you have, I'm gonna take your opinion and others, but maybe you have an opinion, Susan. Would you do the wider spread on the put side and stay at the 5 delta, or would you do the 20-point wide and move up to the 7 delta here on this put side? Because you did point out that the put side wasn't giving much premium, so it wasn't really attractive to do.
Because the market's been going up so much, this is the first day or whatever that it's been going down. I would do the 5 delta and do the wider spread. Just
Okay.
because you said don't be afraid of going that wide or that way. I have a
Okay.
feeling the market might be ready to drop a little bit.
Okay, I like that. I like that thought process. All right, so that's what. Let me see. This is 40 points. So this is the same trade here. Right, same trade, same amount. I mean, it's the same amount but higher probability. So we're gonna go here, and I'm gonna send this, and we're gonna see if we can get filled. So I'm not gonna adjust this one, everyone. I'm gonna let this one play out at night. I don't want to get lower than that where we just got that 160. So I'm gonna let this one play out. If we can get filled there, then great. This is the mid. So if we can't get filled, then that's fine.